In 2008, the world's largest leading banks were dealt a catastrophic blow by the financial crisis led by the collapse of the Lehman Brothers due to their investment in very risky subprime assets. 14 years later, the world is still on the brink of yet another financial disaster, with three leading banks, Silvergate, Silicon Valley and Signature, collapsing one after the other, spreading panic amongst 190 other banks that too are feared to nosedive amidst this turmoil. Both Silvergate and Silicon Valley were holding deposits of over $100 billion each. Though the epicenter of crisis is in the United States, its tremors were felt in Switzerland too, one of the most picturesque destinations of the world, where the Credit Suisse got embroiled in a massive financial crisis. This would have shaken many other banks and financial institutions. Had banking giant, the Central Bank of Switzerland, not turned in as its savior. While the failure of the three US-based banks is attributed to their more than expected exposure in the crypto and startup companies, what is surprising amidst all this turmoil is the fact that cryptocurrencies that have been facing the winters have suddenly come out of the chill and started showing a northward trend on the bourses. Due to the financial crisis, the top 10 US banks have lost around $243 billion in market value ever since the Silicon Valley Bank caved in. Nasdaq Bank Index is down nearly 26% this month, while it lost 23% for the quarter. On the other hand, cryptocurrencies witnessed an upward surge, with Bitcoin trading at $28,180, up nearly 40%, since March 10th low of $19,950. High net worth investor Michael Saylor of MicroStrategy bought a whopping 6,455 bitcoins, suggesting an increased investor confidence in decentralized economy as against centralized monetary systems.
Hello and welcome to 3.0 TV. I am Manoj Dara. So let's slowly peel the layers of the current global financial crisis and its correlation with the cryptocurrency market. Comparing SVB's situation with the other players reveals that nearly 190 banks operating in the United States are potentially at the risk of a bank run. A bank run is when customers start withdrawing their deposits en masse over the concerns about the bank's solvency. The severity of the bank failure prospects can be gauged from the fact that the stock prices of the top 14 banks are down by 15 to 25% since March 8th, the day before the industry-wide sell-off began as Silicon Valley Bank's liquidity issues rose to the forefront. The contagion effect spread fast to the other regions as well. If you talk about the European listed shares or the UBS, Deutsche Bank, British banks HSBC and Barclays and the French bank BNP Paribas are each down over 15% or more during the stretch. Meanwhile, 11 large US banks have actually injected $30 billion in deposits into First Republic Bank to save it from meeting the similar fate as the Silicon Valley Bank. So is it a blessing in disguise for the entire cryptocurrency market? Let's try and understand how the run on the US bank is boosting cryptocurrencies. There are several reasons. The birth of Bitcoin itself owes its genesis to the 2008 bank bailouts. So Bitcoin price went parabolic in the response to the SVB bailout announcement. The bank implosion caused a capital flight to safety, and investors dumped stablecoins and illiquid assets in the favor of Bitcoin. No wonder the current bank sector's instability and scenarios such as high inflation data triggered a trust deficit in the Federal Reserve and encouraged investors to seek refuge in the Bitcoin. So if we talk about the overall outlook, when we are considering the future of the US bank, it must be noted that they face bleak scenarios. In the US alone, it is estimated that roughly around 4,700 small and mid-sized banks with a total assets of $10.5 trillion have to pay deposits to prevent a run on the bank deposits. On the contrary, the large banks such as JP Chase or Bank of America's customers are sticky to rising rates tend to boost their earnings thanks to the floating rate loans. And the US banking crisis and crypto's liquidity concerns, Silvergate and Signature were the primary banking institutions serving crypto companies, while Silicon Valley Bank had many crypto startups and the venture capitalists as its clients. Since these were the most crypto-friendly banks, it would be little difficult for the startups and companies to get lending service going forward as well. So JP Morgan has also backed this claim, and said in a note that the banking crisis could present an opportunity for some exchanges which could gain market share by offering banking services to the crypto native firms and investors. Poor liquidity around assets leads to market inefficiencies where traders lose money due to the events like thin order book, slippages, and the large spreads. It can also cause severe volatility and deter sophisticated investors from placing their investor bets. It's a full circle for Satoshi Nakamoto, who founded Bitcoin. In Bitcoin Genesis block, the pseudonymous founder embedded a link to the London Times headline, "Chancellor on the brink of second bailout for the banks," which means that Bitcoin was created as an alternative to the traditional centralized finance. Now, as perhaps the biggest global banking uncertainty looms large since the first Bitcoin block was mined, that narrative seems even more relevant. Thank you so much for watching this special show on 3.0 TV. I am your host Manoj Dara signing off. But keep watching 3.0 TV for more such interesting analysis. Thank you.